Good morning, everybody. Cowboy here, and we have Ben Kelleran with us on this fine Tuesday. We hope that you all had a good Thanksgiving break. We didn't really do any shows last week, but we're back to the shows this week. Before we get started, take a look in the the description. We got a couple things in there for you. Nice, some goodies. We got it free Algo from our paid sponsor, Algo Factory. We also have all of the places where you can find Ben, or at least all or some of them, where you can find Ben and Ben's awesome work. Ben is an expert in the energy sector of the markets and also really got some great chops on politics. I always enjoy our shows, Ben. And for those who maybe are not able to find their way to the description, can you let people know where they can find you?
Yeah, so it's just a Substack, write about different investment ideas, commodities, current events, have podcasts and all that. But if you just look up Contrarian Korner with 2Ks, I get the joke that I was 1K short. But if you look up Contrarian Korner on like Apple or Spotify, you'll find the podcast. If you look it up on Google, you'll find the Substack. So not too difficult to find.
Nice. Well, I think you had a couple of things that you had ready to go today. One of them being very near and dear to a lot of the Rogue audience's heart, and that's silver. What a run that is on. But please go in whatever order you feel is best. And
I'll
love to hear what you got.
Share my screen so people can have some visuals. And a lot of this will just be like very high level stuff. But when you look at like zoom out a bit and look at where we are compared to I guess past history, you've got silver basically was it 8 straight months in a row, which is unusual. So I'm not saying that it's going to continue, but at the same time, when you see some of the stuff going on with physical deliveries, and there are people that are a lot sharper than me, like precious metals is their thing, and they get into the physical market side of things. It's I think we're setting up for like silver's not just going to 60 or 65 by the end of next year. And do I know what the squiggles are going to do between now and a week from now or 2 weeks from now? No. But I kind of look at it as, okay, this is a time for silver to play catch up a little bit to gold. And I think gold is generally probably going to go higher. So like if you kind of like get into like what's happened in the last several weeks, what's happened with like some of the different things and trends with silver, like this is not a move that ends at that ends here. They're not in like the parabolic like blow off top phase, and this is gonna be it. Like it's going back to 40. But again, this is kind of one of those things where I don't know if it's a great time to buy physical currently, but the thing that I've been buying a little bit of lately, and to be perfectly clear, I have way more in physical silver than the miners. But I was looking at some of the miners, and a lot of these things are just absurdly cheap. And they're basically, a lot of them are pricing in maybe 30, 35, 40 an ounce, depending on which ones you look at. And we're not really seeing, basically it seems like the market and like the miners in particular are not like believers in the recent run from silver. But the thing that's like very interesting is a lot of, especially if you're just looking at producers, a lot of the, I think the average like realized price for Q3 was somewhere in like the $39, $40 an ounce range for a lot of silver miners. And it doesn't take a mathematician to tell you that the average for Q4 is going to be a lot higher, right? When you start basically right in here at October 1st. And that was effectively the low, but basically 45, 50, 55, somewhere in there. And I think that's where you look at the setup of some of the silver miners and the valuations. Like there are a couple of ones that are already producing and have some very interesting assets, and they're trading at, I don't know, like 7 or 8 times earnings. somewhere in there, and that's with like average. Basically, if you take their Q3 results, extrapolate it out, but a lot of these things are trading at just ridiculous valuations, and you can kind of take a basket approach. But I look at the silver miners right now as like, yeah, you don't go pile in here because silver could pull back a bit to like mid 50s, but I think like I wouldn't be surprised at all if we're looking at 60 somewhere in there, 65 in the next like 2 to 3 months. So, and it's a setup where if you get the silver miners starting to believe, it takes like a minuscule amount of money in the market flowing into the sector to start to move some of these names. So
Nice. So the miners might be the kind of the backup play, if you will.
yeah, I mean, I think everyone should have physical silver and basically have the shit hits the fan fund in some of those. But if you look at like some of the just this is a basket ETF of the juniors, and some of these are not really junior miners, but it's kind of besides the point. And you kind of see where these things are trading. Like you can argue a lot of these, like even the basket, the ETFs. So if you don't want to dig into individual companies, are due to start flying. Especially like it's not even like silver needs to go to $80. Like some of the people you see on Twitter, where it's like this is the start of the blow off. Like I don't think it's gonna happen that way. Like silver moves faster, but I don't think it's gonna be something where we have some parabolic euphoria phase yet, because like you see a lot of the comments and a lot of the people talking about it's like I don't think we're anywhere close to euphoria on silver. And that's why I think the silver miners are pretty interesting. So you can go from producers to companies that are going to be starting production in 2026 and they're trading ridiculously cheap. And then you can go into some of the more explorer side of things. And I think there's some that look really interesting there. And that's where it makes sense to have a basket approach. Like, don't just pick like the silver miner that you think has the coolest name or whatever. I would be buying there are a couple with some pretty good company names, but the basically if you take a basket approach and say, hey, like this is gonna be a small position, and you sprinkle in 3, 4, 5, 6 different names, I think that's a better way to approach it. And again, like there are a lot of like issues with some of the silver juniors. Some of them will dilute you to death. Some of them have a shitload of outstanding warrants. There's a lot of problems with that, but I think the actual setup is if you can avoid like the obvious traps, the upside on some of the ones that are going to work is it's not just like, oh, this is going to double when silver goes to 65 or 70. And when you get a little bit of money coming in, that's when these things tend to go realistic. And that's why people are, I think, a little bit nervous as they see silver at all-time highs and just assume like now's not the time to be buying silver miners. And yeah, like you'd be better off like going back and buying a chunk of these earlier this year, obviously, because they've had a monster run. But is the run over? Like, I don't think so. Anyone home? This is teeing up for you guys over there, but looks like you might be on mute.
I think Nick's on mute.
Okay.
No, you're on point with what you have to say. Definitely the run is not over. And I think long term, because right now the way this country's hyperinflating everything, you know, people are like, oh, we're going to have a return to affordability. That's never going to happen. You're never going to see that. Why? Because right now, not only are we in a run to failure mentality right now with pretty much many apparatuses in the government, but monetarily speaking, we are very inflationary, and there's no escaping. We're guys. I mean, we're to the point. I was talking to a buddy of mine the other day, and you know, we're messaging back and forth, and we kind of drew the same conclusion. We are completely locked in, right? It's like when you get on a roller coaster, they lock you in. Well, we're locked in. We're locked in for hyperinflation. We're locked in for an economic collapse, whether you like it or not. So, what Ben's projecting here, giving you the technicals, giving you the behind the scenes, the play by play of what is happening within the markets, these are some of the vital signs that you need to be following, right? These are some of the warning signals, the red flags, as well as, the signals or the that you need to see that, hey, you know what, things are not normal. It's not business as usual anywhere. There are monumental global paradigm shifts that are occurring right now, and stuff like what's happening right now with the silver market, with the precious metals market, is a dead ringer. The commodities market, dead ringer on what the hell's really happening behind the scenes. Apart from all, cutting through all the noise, all the bullshit, all the lies, all the disinfo and misinfo that's out there, there it is. There's a real indicator. And folks, I'm telling you right now, this should be on everybody's radar screen. Cowboy?
Don't know if he's back yet, but one of the things I will jump in, it looks like someone in the comments was asking about the JP Morgan trading desk moving
that's bullshit.
to
that's bullshit. That's fake news.
Singapore. That's
fake
the
news.
Headline where people write it in all caps and you see this stuff and it's like,
that's all bullshit, man.
What's the what's the story there? That's your world more than mine.
Yeah, that's all. That's a horse shit. I'll tell for those that know me personally, that you would know this. It's I was a frequent guest at 270 Park Avenue. That's JP Morgan's headquarters. I know their trading desk, and I'm also pretty much Mr. Gold Singapore, right? I work very closely with a Singapore Bullion Market Association member, and their largest vault there, which is a massive facility. And I'll tell you right now, there's no JPM picking up 4,000 of their trading desk and moving it over to Singapore. That I don't know where that information came from, but that is not true. That's fake news. That will never happen. There's no need for it to happen.
Yeah, it's totally that's the stuff. That's the stuff where I look at. It's like I don't really trade the commodity directly. Right. I mean, I own physical, and I think the miners are an interesting speculation here. And
bingo. That's all you need. Hold the physical and play the miners.
Well, that's the thing with the futures market and some of this other stuff. It's like, okay, if miners are pricing in 30 or 35, what do you get if they start to price in 50, 55, 60?
Exactly.
I mean,
forget about it.
A lot of these are 3 to 5x on that move alone. And if your view on silver is that we're going to end up at, I don't know, 65, 70 an ounce, by the end of next year. I think that's pretty conservative, honestly. And $100 an ounce, by the end of the decade, but probably sooner, right? A lot of these silver miners, especially if they're actual businesses and already producing and they're not diluting shareholders, a lot of them they already print money, right? And their margins absolutely explode if you're getting silver running like I think it's going to. So it's one of those things where you look at the sector and you look at, this is really interesting, I think, the gold to silver ratio, what it's kind of been doing since April. It's I'm not telling you where the target is. Some people say it's 50, some people say it's 30, but this is not a chart that looks like it's going to go and explode to 120 or 150 as far as the gold to silver ratio, right? And you kind of look back and say, okay, where do we go in past cycles? Where do we kind of average? It's been trending up over time, obviously. And you can kind of look at the monthly as a little bit easier to see for long-term stuff. But again, a move to 60 or 50 on gold to silver, if gold just stays at 4,000, right, which it's a couple $100 over, but I'm just using it for round numbers for mental math sake, right? If gold's at 4,000, a move to 50 on gold to silver, right, that's $80 an ounce, right? And that's the thing where I don't think you need to be looking for, okay, silver's going to 500 an ounce and all these things are going to explode and the sky is falling, as Lisa said in the comments. But as far as the actual setup for silver, precious metals, and what I wanted to get into next was copper. A lot of these things are set up for I think they're going to grind higher. I think there's going to be runs where, okay, you get a big bump in a couple weeks where it's like, bam, you ran 10 to 15% in a week, and then it consolidates. And platinum kind of does the same thing, where it's basically you'll get runs where it's boom, like 10% a week, and then it hangs out for a bit. But it's kind of the same deal where, like, for me, trying to trade in and out of this stuff is very difficult, like trading the metal prices specifically. And so that's why I was just like, all right, I'm going to load some physical platinum and forget about it for 5 years, because I have a pretty good idea where it's going. And for silver, it's kind of the same deal, where you're going to get big moves in like short amounts of time. But
Right.
as far as like, you look at what happened from August, like, I think we're going to get more moves like that, where it's kind of just a longer trend versus, oh, you got massive blow off top weeks where it's like, okay, you need to cool off or even sell off a little bit. But you look at, like, this is a couple guys who have talked about, like, okay, you're trading at 25 or 30 an ounce for a lot of these juniors, and you look at where what's kind of happened in past, like, silver junior moves. Like, again, this guy's, I'm sure, cherry picking the stuff that goes on, like, does 20x in like 6 to 8 weeks or whatever. But he is, like, he does make an interesting point that like, basically all the silver miners are above like their 200-day moving average, which for a sector filled with like dumpster fire companies that are constantly diluting you, that's a pretty interesting signpost. And you can kind of get into this is actually a really good video from Vince Lynchy, and I don't know if you guys have had a chance to reach out to him, but he would be able to give you the nuts and bolts on prices.
Cowboy, are you back?
He's
left us,
and
man.
Yeah,
he's left us. He's abandoned us.
He threw us to the wolves. But if you look at like what's going on with like the physical side, this is where I think it gets the most interesting, and it does make me a little bit nervous about like the blow off and then collapse, where if like the physical,
I'm here hold on.
If the physical side of things with Comex or LME, or take your pick, right, if that starts to blow up, then that's where you're like, okay, instant price discovery, and then you get a collapse after that. But the other thing that I want to get into that hasn't been getting as much attention from a lot of people is copper. And I don't know if you guys have looked at copper lately, but if you pull out the kind of semi-ridiculous headline news of we're going to tariff and then we're not going to tariff, and so it's like the giant pump and dump where it goes here, it's like we're bumping around effectively all-time highs for copper. Like, I'm cherry picking obviously because it's not $6 a pound because of like kind of one-off like trading issues, but I look at the setup for copper as kind of the same deal. And they had was it the Grasberg mine that Freeport owns in Southeast Asia that I think was 4 to 5% of world copper supply. It's somewhere in there. It might be like 3%. Don't quote me on the exact amount, but it's a big mine basically. So that went down like several months ago. They're like, oh yeah, we can get it back up in 2027. It's like, okay, we'll see. And you look at
I think that's where most of the copper is actually consumed as well. Or not consumed, but put into factories, is going to be over in Asia as well. So you have a direct input.
Well, I mean, copper goes into a bunch of different manufacturing processes and batteries. Like, it really is something that we need a lot of. And there's a bunch of different ways to look at it. Again, you're not going to go buy physical copper just because of size and like value for obvious reasons. But you've got like the copper ETF basically trading at what is let's see if I can get zoomed out here. Yeah, you have copper ETF basically bumping on all-time highs. You've got this is a newer ETF, so you won't be able to see that as much. But a lot of the copper juniors are in a setup where it's kind of the same deal as silver, where it's like you start to run numbers on what some of these stocks are pricing, and some of these are like exploration names, not producers, But even like some of the small producers, they're trading at shit. I don't know. Like there's one that I own a small chunk of that's a producer in Brazil, and I think they are basically trading at 10, 11 times earnings. And some people say to look at cash flow and all this other stuff, but basically, any way you slice it, it's cheap. And that's with copper prices that haven't been on a massive run until shit, I don't know, like the last kind of 6 months, really. And when you look at where we were at the beginning of the year, and that's kind of like low fours, then we dump down to mid fours again. And now we're starting to see like, okay, like I think we're headed to $6, maybe $7 a pound sometime next year. And like that doesn't sound like much. And it's not something where the Trump administration is going to come in and carpet bomb like the price of copper with headlines like they do with oil. But the thing that's interesting is like you look at it's like, okay, $6 copper, and then you've got other metals in a lot of these deposits, and you start to run numbers on some of the smaller miners. It's like, holy smokes, like some of these things are trading like either one, this thing's never going to get into production if it's like an explorer, or two, copper is going to fall back down to $4 a pound. And that's I mean, the operating leverage cuts both ways, but I think you kind of zoom out and say, where's copper going over the next 2, 3, 4, 5 years? I think you're like some people say $10 a pound. That might be a little excessive, but even if you get up to 7 to 8, right, in the next 2 to 3 years, some of these companies just print cash. Like it's kind of obscene how much money some of these companies make because copper, like the volumes you can get out of some of these copper mines are just absurd. And that's where I think this is kind of interesting. I'm not a huge fan of like some of the there's a lot of people that do chart art. I kind of look at it as okay, there has to be a fundamental story there, and I have to understand why something is gonna explode higher or whatever. But some people just like to do some ridiculous things. But I think this guy is one of the sharper Twitter accounts to follow if you guys need some social media updates. Grady, but basically, if you look at where copper has been, like if you get these long basing like formation where okay, it takes 15 years for copper to move, it takes 15 years for platinum to really break out, it takes 10 years for some things to really run, right? You look at even like gold, which has been effectively the king over the last, I don't know, 2-3 years especially, right? You look at what happened from 2011 to 2020, and then takes another 2 years into 2023, and then boom, like you're off to the races, right? So I don't know if it's going to be the exact same with copper, but you seem to be like basically bumping along the top of this like $5.50 range. And I think when that starts to go, you're not just going to go, oh, like copper to $6 a pound, right? And that's when a lot of these juniors either are I mean, it's the same as silver, where you get a little bit of money flowing into these sectors, and some of the stocks go ballistic because they're cheap, and a lot of people don't follow them. And it's, I think, a very interesting pond to be fishing in, especially if you look at broader markets as a little bit of a overvalued shit show and spending circle jerk as far as AI. So it's definitely an area to take a look at. You want to avoid the stock promotions and some of the minefield. Like the junior miner space is an issue, but if you find companies with insider ownership, like you're not finding a bunch of warrants. Like there's one that I bought like a small chunk of, and the CEO basically took out a loan on his house to backstop a project. And like that's the kind of thing you like to see when CEO owns a good chunk of his net worth in something, and he's very clearly against dilution if he can avoid it. Like there's stuff out there where a lot of these things are going to go 3 to 5 times like very quickly when copper starts to really run.
Well, I mean, so copper and gold have, I think, a similar reason, like a similar catalyst, and the world, I think, is still concerned that there's going to be a lot of war in the future, right? Um, you've got Europe beating on the war drums, and even though I don't think Europe could handle a war for more than a couple of weeks, I mean, essentially, there's been war for
like
like
a
the
few
last.
days.
Yeah, they just don't have it. But
3
they
days
don't have the
top.
equipment. They don't have a lot of things, but they have the news channel, right? And so, and also the rest of the world is going to assume that the U.S. is going to come onto Europe's side, and the U.S. can sustain a war for a much longer period of time. And that's a whole different kind of conversation. But under any circumstance,
8 days.
well, I'm not talking about that
That's
kind
Pentagon's
of war.
numbers.
The U.S. has been at war for the last 2-3 years in Ukraine. Like the U.S. can sustain certain kinds of war for a long time. The U.S. Can sustain low-level stuff for a very long period of time, and so that's going to cause a lot of things to go up, like copper. And when the world is concerned about real war happening, then of course, yeah, copper is going to go up, gold's going to go up. Silver is actually used in a lot of war tech. I think a ton of silver just gets vaporized whenever any kind of like torpedo blows up or anything like that. So,
Was it
these
like
are
100 ounces or something ridiculous? Or I think
what's
it's
that?
actually pounds. It's pounds of silver in a lot of the missile components and all these different things. Where,
I think it's like a
like you said,
kilo.
yeah, it's not something you can recover when stuff goes boom, right?
No, I mean it goes into the environment and it's done. You can't mine it. So anyway, I think that even without that though, um, look, chart art exists for a reason, and if you see a commodity super cycle coming, it may just be that the entire economy is going to change, and the only thing that countries are going to be able to point to as far as how to value their currency or even their output is going to be what they can pull out of the ground. The fiat system, I don't think is going to just like disappear, but I think that reliance on fake money is going to decrease, where countries are going to say, okay, put up or shut up. Like, what can you really provide? Are you going to give us fake money, or can you produce something that you can sell? And the bond market's going to shrivel, and it's going to happen over time. But I think commodities, this is a V the gorilla thing. So V, you can speak to it better than I can. This is something you brought to the table years ago, but that's what the economy is going to go towards, is commodities and production are going to determine the value of your country and its currency. So if that's the case, then yeah, commodities are going to go up. And if it's a very long-term plan or a long-term prediction or what have you, then you're going to see a steady demand grow for these things over time, which is going to contribute to a high time frame trend. And then of course your chart art starts to make sense, right?
Yeah. Well, the one that I think is interesting on the energy front too, and this is kind of talked about a little bit with this winter, and again, like trading natural gas directly is generally a bad idea, and even the experts get wiped out. It's like called the widowmaker for a reason. But if you look at what's happening with natural gas on like the actual physical demand, supply and demand side, and if this winter turns out to be cold, like sounds like we're already getting a bump of cold weather incoming for a good chunk of the country here, it's one of those things where I think it's a pretty interesting pond to be fishing in as far as some of the stocks. And a lot of these things, they aren't like super expensive, right? They're not, it's not like you're looking back at 2020, what was it 2022, I think, when natural gas was like $8-9. Yeah. Right. You're not looking at, oh, natural gas has already gone up like 500% from the bottom or whatever it is, right? Adult like 116 to like $9, touching 10, right? You're not looking at natural gas where it's like, okay, you're catching the blow off parabolic move. You're basically in the same thing where it's like, okay, we bounce around somewhere right around 2, 3, 2, 3, and then 4. And then I think we might be finally seeing signs of life for like an actual long-term move and not just like, oh, this is a weather related, it's cold type of move, but that remains to be determined. Remains to be seen. And you look at some of these stocks, it's like, okay, they're trading at 10, 12% free cash flow yields. And if they're certainly not pricing in $5 or $6 gas anytime in the near future. So that's something where it's a bit of a minefield. And there are a couple, I know a guy who owns a big chunk of Pado, which is the basically they point to it as like the go-to name in Canadian natural gas, and it like pays like a decent monthly dividend. I don't know if it's particularly cheap, but they hedge out most of the risk, and obviously would be buy of a lifetime back in 2020, but that's probably for bankruptcy worries. And like a lot of these names are not very expensive. And yeah, it looks like this one's run, but there's a bunch of stuff out there where it's like, okay, some of these big names like EQT, I think is the biggest natural gas, or one of the biggest in the US. And then was it Expand Energy? I think is another one where a lot of these guys, like, yeah, it looks like they've had a pretty good run in last year and really since August, but a lot of the valuations on them, this is the one that I own a tiny bit of. So not a specific recommendation, but basically it's one of the unhedged natural gas producers in the Marcellus in Western Virginia. And like a lot of the like you get a ton of torque if these names really start to move, where you can kind of see, okay, this thing will run 15-20% like very quickly if things get going. So I think natural gas is a pretty interesting place to be looking at as well. But the basic thing I wanted to like get into for today is like, okay, you look at the metals, you look at what's going on, you look at the different moves in commodities, especially when people are starting to freak out about what's going on in the S&P and what's going on with some of the different things there. And like, it'll be interesting to watch, that's for sure. But it's right. Do you really want to be buying the S&P close to 7,000 when a giant chunk of that is NVIDIA, Google, Microsoft, right? Or do you want to like do some research and poke around and try and find stuff that's, I think, going to be a lot more interesting pond to fish in over the next 3 to 5 years? And that's where like I'm not smart enough to pick the one copper junior that is going to go up 10,000% and like stick my whole portfolio in it. But like, I think a basket approach looking at the copper and silver area, particularly like right now, looks pretty interesting. And some of the energy space, especially if natural gas keeps moving, that's a good pond to fish in as well. And like, I still like oil, and don't get me wrong, like 59 in my view is the wrong price long term, but I've kind of realized like they're going to carpet bomb like oil with headlines, and there is more supply than demand temporarily, but is that going to last? Like, no. And so that's where I'm kind of looking at some of these different things and trying to find different ideas. So it's yeah, Rob says nuclear as well. I think nuclear, like with uranium, you look at that, it's what, 80, somewhere like low to mid 80s a pound right now, and that's not going to last either. And like Cameco is the big bellwether name. If like you look at where money's going to go first, like the big guys and the ETFs and all this other stuff, like they go by Cameco, and so that like valuation wise is maybe not the most attractive, but there's a bunch of like small caps and different names, and it's kind of the same deal where it's tough to look at this sector without being a little bit disgusted at some of the management practices at some of these companies. But if you found a couple good ones, it's like, okay, these are the type of things that go up 3 to 5 times and actually give you real torque when uranium gets moving. Like you look at where Cameco was in like 2020, I guess sub $10 stock. And that's when uranium, like Rob was saying, I think it basically bottomed out at like $20 a pound and 25, like 30. You had a chance to buy a lot of the uranium when it was dirt cheap. And is it as cheap now? Like, no, but it's one of those things where you look at the whole sector and it's like, if you think uranium, the supply and demand, like where that heads over the next 5-10 years, especially if we do start building new nuclear reactors, right? I think a lot of that stuff is a pretty interesting risk reward as well. So.
Oh yeah. I mean, the problem with judging AI and tech on its merits and on its fundamentals, anybody who's done that has lost money, because those companies are just going to be where the money gets plowed into. So if you're going to bet on something like, NVIDIA, so on and so forth, what you're betting on is a systemic allocation of basically what are national funds, right? And so you're betting on a lot of things when it comes to your commodities and such. Like either it's going to be the trade of the century, or it's probably going to be, just in my own opinion, a good trade. It may or may not keep up with the the AIs and the NVIDIAs of the world, but in the end, when you're playing something like NVIDIA and you're just betting on money being plowed into the space, not based on fundamentals, but just based on who knows what, well, that's a gamble. That's just, you're gambling at that point, right? And it's hard to know when the music's going to stop on that. So that said, when it comes to actual demand for commodities and things like that, that's something that is like measurable, right? What the hell is going on here with my phone? I shut this damn thing off. Apologies for all the interruptions today. I've had quite the morning. But the point here is that, yeah, I prefer to consider things that are, when it comes to stocks and things like, I don't really play stocks. I buy stocks and I sell them really quickly if I'm going to even play stocks, and it's usually penny stocks. Holding something for more than like a day, it's like nails in the chalkboard to me. It's hard for me to do, with the exception of, buying crypto at the bottom of the cycle and selling it a year or two later. So if you're going to play stocks, I'd be looking at something that produces something and not trying to get 10 times my return in a year because it's NVIDIA. I'm kind of with Ben on that one. With the exception of the fact that I generally don't hold stocks.
Yeah, no, it is one of those things where, like, you look at, I think the valuations are like not a good timing tool. Like you said, if you're trying to short based on valuation, you have a good chance of getting run over. But the thing that is interesting is it also tells you where money's hiding out. Like, right, by definition, if a whole bunch of people, like a ton of people, own NVIDIA stock at 40 times earnings, whatever it's at, right, that means there's a lot of money parked in there that is not going and buying a coal stock at 3 times earnings, right? And that's yeah, Rob is getting into a good point there too, with like, if you own some of these like picks and shovels plays for the companies that are going to be out there drilling and exploring, it's a pretty interesting place to be looking. And Gulag did throw up one of the stocks that is in the copper basket I bought, but again, these are all like very small companies, and so it doesn't make sense unless you are a expert geologist and you know everything about some of these companies to try. Like, it makes sense to diversify and just look at it as, hey, I have one copper investment or one silver investment, and it's just sprinkled across 5-6 different companies, whatever it may be. So, and this is I'll show share my screen here again. This is the kind of psychology where people are talking about, oh, no one believes it. And it's, look, like, I don't want to be like hyperbolic talking about silver to 100 in the next like 2 months, because that's just not how markets work and it's not healthy. And like, this is the feed where it's like you have multiple different people talking about different things in silver. It's like, look, is silver going to be down to like 2/3 a year later? No. Is it all that valuable to even compare to like the Hunt brothers trying to corner the market? No. And yeah, I think, Rob, like low 70s in 4 months, that's entirely possible. I kind of look at it as like, look, everyone's kind of expecting a big old correction, and some people are right. This is the same thing I was talking about, where the miners are like selling off a bit and not paying attention to the fact that silver went from like low 50s to high 50s. And it's kind of the same thing where like you can get into like, there's a bunch of good people that are following the physical side of things closely, and that's not my area of expertise. But what I will say is, it's not like a run that is going to end at 60, 65. And yeah, it would be would make more sense to have bought silver at like $20 an ounce, 25, 30 an ounce, right? So if you don't already have physical, it's like going to be a bit more painful to buy now, obviously. But if you are looking at different investments, different ideas, and again, this is not like you put the backbone of your portfolio in silver miners, and it's just not going to be that way for most people. But if you look at some of these names and throw a small chunk in them, like, I think your chances of making outsized returns, if you can avoid the criminal management teams and the share dilution that comes with a lot of these projects, it's very, I think, high probability bet that if you get silver continuing to move, a lot of these miners are going to play catch up, especially the ones that are already producing or are close to producing and are going to be printing cash here pretty quick. So
yeah, if you you know, I think the term that you're using, that anybody who's watching this can kind of pick up on, is torque. So what's going on there is that you have the value of the underlying asset, and then there's the company that is mining it, and they have a lot of different metrics rather than just the value of what they're pulling out of the ground. So yeah, I think it's, if you are going to look into a sector and you're playing with small kind of companies where you may not even have time to go through all their paperwork, or it might be that their mines are not even complete yet, or what have you. One thing to know is that a silver mine, from my understanding, takes about from start to finish, like about 5 years to dig, right? So if you have companies that are currently in an expansion phase, you might be a little bit early, but I think $100 next year is completely reasonable, like well within range. Typically, like if you look back at the charts, and this is something that Marty Armstrong likes to point out, when it comes to like, and I don't like to use the term super cycle, but when it comes to big moves, you're going to see price eclipse a number like 50, and everybody's going to think about price going to 100. And everybody's going to panic in. And then around 100, if it can breach 100 with any confidence and stay above there for a period of time, everybody's going to be looking at 200, and everybody's going to be looking at 500. Right now, I'm not saying we're going to see that anytime soon. That's, now you're starting to dip into Bix Weir territory, but I'm also not saying that's impossible either. And a lot of it is really going to depend on the world economy. And again, you're starting to get into the conversation of, is money being plowed into silver? And that's what's causing the price to go up, or is the dollar just really in that much trouble, and a combination thereof. And at that point, though, I think silver long term is a good buy right now. I don't have a problem buying physical at the current price. Yeah, woulda, shoulda, coulda, woulda. If you woulda, shoulda, then you've shut all over yourself. Uh, so it is what it is. Either you get in the game or not. But one thing I can tell you is that when you hold physical, you hold physical. Like you're not buying some piece of paper that they can just rip away from you in the great taking, right? And I'm not
100%.
going too deep into the conspiracy end of things, but let's just face it, that's kind of part of the deal. Now, we all V can really weigh in on this better than I can here again, but it's more his territory. The U.S. equities market is where the world invests. It's where the money is. It's where the money still is, right? Sure, the world's going to play in, say the FTSE and the DAX and the Nikkei and China's markets. Sure. But all the money is still floating around the U.S. All the liquidity is still here in our markets. So
I'll be very, very careful when I say all the money and all the liquidity.
Yeah, well, you know what I'm saying, though, when it comes to financial markets, right?
I would put it this way. This is the market because of the excessive amount of fraud and bullshit numbers and accounting trickery. This is the market that you get the most returns.
Yeah, but I think what Nick is getting at is he's saying that relative to other financial markets.
That's what I'm segueing into.
Yeah.
So the rest
I'm not
of the
talking
world,
about the reason why it's the case, but you can cram more money into this market and make more money than anywhere else, regardless of the reason why.
Correct. You get the biggest return on investment here in this market than anywhere else on the planet.
It's also, and regardless of the fraud or anything else, I would hazard a guess that many of the other markets in the world have the same fraud or worse. From a proportionate look, right? The point here, though, is that right now that's where the game is, and right now that's where a lot of the world's money is, and so
also a lot of the investments that occur globally, when you look at large economies and the way they invest, they're not investing in equities markets. That's not where they make most of their money. They're investing in large projects, large infrastructure projects, large operations in mining, raw materials, things of that sort, resources. Because we don't produce anything. Our biggest export is our fucking paper, right? So when countries that are resource rich and are physically empowered, larger economies than even us, when they want to dabble in equities and they want to take a portion, of their equities, they put it in here. So a lot of people, when we talk about like, we're the largest market in the world, it gives an impression to a lot of people that this is the only place that every country in the world is dumping all their coin on us. That's not the case. They're taking a portion of what they can invest or what they were willing to invest and putting in here because the returns are significantly higher here than anywhere else in the world. That being said, we're still a country that is in a solvency crisis, right? So that's the nuance of the quote unquote largest, most equitable market on God's green earth. That's the nuance underlining it. But go ahead, you can continue.
Well, but the other side of that nuance is that our solvency crisis is everybody's solvency crisis.
No, so, it's not everybody's solvency.
Well, not everybody, but it's pretty much going to. It is, and it's not. Like maybe you have
really not.
Like you have countries like China that they're walled off. They don't play with the little hats in the banking system, but most countries in the world, have a lot of stake in our country, and China owns a ton of our debt. So yeah, sure, China would get over it, and China would survive, and they would be fine. But yeah, I wouldn't say the same for Europe.
No, I wouldn't say the Western world is they're enthralled. They're in what's the word I'm looking for? They're entangled in a death spiral along with the United States. The United States is trying to what the U.S. is doing right now, guys, is trying to, we're all sinking, right? And we have a 10-ton cement brick that has tied all the Western countries together and is sinking. What the United States is doing is trying to untangle itself from the mess that it has created and then rise to the surface, which I think the U.S. will. I don't have any doubts that the U.S. will survive this. Europe is fucked. So we've already like look at the Ukrainian peace plan, right? We're cutting our losses, and we're trying to get back to the negotiating table. We rescinded. We're no longer a global hegemon. We are a hemispherical power, a regional player. That's what we are right now. You know, the idiots in DC, they haven't gotten the memo because they're too low IQ. But we are a regional power. We are a regional player. We have decoupled ourselves smartly so. One of the great things we've done from the European mess. But the EU, the UK, and the Commonwealth countries, Canada included, and the shithole in the Southeast Asia known as India, they're going to go down hard, really hard. So that's the one benefit we have. It is our debt, it is our problem, but the beauty of it is we're going to reorder it. The rest of those guys, not so much. And
this is the point. And you can't have that many countries suffer that much without it affecting all the rest of the world. So, at that point, you're looking at pretty much a write down. I think you're going to see a write down.
Right, correct. It's going to go to a write down. It's going to go to austerity, right? And but over here, like you and I, we often talk about this term, the cleanest, dirtiest shirt in the playground. That's going to be us.
Well, and we produce oil. We produce a lot of it.
We have a lot of shit here that we're hopefully, my hope and prayer is that we partner with the Russians and the Chinese to really develop and take our resources and our infrastructure to the next level.
Yeah, we produce, and we still make things. I know we don't make things. Yes, we make things. We make cars, make all kinds of shit. We don't make it as good as other places, but we still make it. And the point here is that we're in a much better position than a lot of the world when it comes to how it's going to go.
I love what Gulak said. USD is the best tasting turd.
Yeah,
brilliant.
It's the turd and toilet.
Everyone has a shit sandwich, and it's just,
everybody has. We sell the best shit sandwich in the world, brother.
Yeah, we actually use a glove on one hand with our street food, right? Like, but what I think is going to happen though is that I think we've talked enough about this on this channel. Like, China's best placed, I think, macro, and then Russia's doing fine. They don't have the manufacturing that China does, but actually, my understanding is a lot of
their
really
manufacturing is second to China, bro.
Well, I think in potential
to China.
In potential, in quality, in up to date manufacturing, but I don't want to paint a too rosy a picture of these places either. They're going to get hit. Everybody's going to get hit. It's just a question of, like Europe, who has neutered their entire population and has brought in the third world far worse than we have. Our third world that we brought in, and look, this isn't a religious conversation, but most of our third world we brought in are Christians. They're from, South America and all that, but at least they kind of have some similar values.
Europe.
What's that?
It's not like what the Europeans do.
No, Europeans have brought in the Muslims, and that's fine. Like, this isn't bashing Muslims here, but it's just too different of a civilization. And by the way, it's not the Muslims that you want, because there's all kinds of Muslims that you want in your country. They're rich, they do well in their own country, but that's why they're staying in their own country, because they do well there, because they can hack it. It's all the crazy people that they've emptied the prisons, and those are the ones they're sending to Europe. And I don't care what religion they are, you don't want those, and that's what's flooded into Europe in a big way. With some exception, here it's a little different. And also here we have some laws that are in our favor, as opposed to Europe that's gone full blown Orwellian. They had a guy who was in the US, and this is, England, which at this point, City of London, I think it's all Europe at this point. I don't think it's hard to distinguish between, the United Kingdom and Europe at this point legally from a standpoint like we're about to talk about here. This guy comes here to the US, a British guy, does some videos and pictures of him shooting guns. That's fine. It's illegal here to do. Posts them.
Oh, I saw that. That was fucking nuts.
I saw that.
Posts them, goes back home and gets arrested for what? Because he offended somebody. And I also heard, and I don't know how true this is, so you have to be careful. I also heard about the Singapore thing, and I was monitoring while I was not here, and the Singapore thing was said by some people I've never heard of, and some people who have really good reputations. So the Singapore JPM desk thing, As soon as I sent it over to V, he's like, yeah, it's fake. I'm like, oh. But that said, what I also heard about Europe is that they've gotten rid of trial by jury. It's like it's turning into a fucking, excuse my language, a Kafka model novel over in Europe right now. So I'm not going to go there. And I got family there, and I love that place. I love Europe. It's beautiful. I like England. It's just cities. I know London's kind of a trash hole, but overall, I love all those areas. It's got beautiful architecture, and it's being dismantled. So, Europe is probably going to be a great place to invest in like, 20 years when the world's really gone to crap. When everything really dumps down and Europe is like in a crap hole.
I'm gonna buy some shawarma stands.
Yeah, buy some, dude. I'm gonna invest in like mosque building. But anyway,
falafel stations.
Europe is done. I think the Middle East is everyone's gonna take a hit, but in the macro, I think Middle East is on the rise. And it's there's an Andrew Tate clip that Vel has posted in Discord recently, and I think he shared it with our private chat too. But basically, Andrew Tate's like, yeah, well, basically the colonial powers of the last few hundred years, the European colonial leadership, the freaking European royalty that have mixed with the little hats over the years, and they have names like Rothschild, whatever. Well, they've been making money by taking resources out of the third world, and then Europe benefits. Well, now they've decided that it's time to export all the wealth out of Europe, and places like the Middle East are now going to grow. That's what he said. I think he's an op. I think he's an intelligence op, but intelligence ops oftentimes will give you true information. I think it's a reasonable
What did he say
assertion.
about the colonial powers?
What's that?
What did he say again?
He said the European colonial powers the last like few hundred years,
Mhm.
they made money by and probably still do, extracting wealth from third world countries like Africa.
Yes, right.
Like that. And then what's now happening though is that they've decided it's time to extract all the wealth from Europe,
Correct,
and put it into like third world countries like the Middle East and
then
stuff. And not all the Middle East is a third world country, mind you. There's beautiful, wonderful first world places in the Middle East that make the United States look like trash. But most of the Middle East is a third world country.
Right.
Most of the US is a third world country.
But no, that's exactly what's happening, man. Yeah, no,
it's I don't know if you saw the video. See if I can find the link and send it to you. It's actually pretty good. It's one of the few times you hear Andrew Tate sort of just having a regular conversation rather than his usual what he does. But anyway, I've gone on a rant here a little bit, but I think that what's going to matter is resource extraction and manufacturing. I think the United States has the seed of manufacturing still here, enough to where after 5, 10, 15 years with the help of maybe technology from China, we can bring it back to where it was. Because I know everybody doesn't want to hear this, but China's manufacturing tech is 2 generations beyond ours. We don't even touch China right now. Just understand that. Don't try to enjoy that jagged pill as you swallow it. It's just reality. China has entire factories and robots build everything.
It's a country of poverty, sweatshops, and rice paddies.
It's rice paddies, and I looked at, dude, I've been there, and that was years ago. It was beautiful then. Understand that, like, sure, there's always going to be third world villages in every country, including the US, in a big way. But China has, like I just said, they have factories where robots rise up out of the ground and build cars. And then that's it. The cars come out, they come off the line. Like, there's no humans. Their lights aren't even on in the factory. Like, the only humans involved are techs in the other room, making sure that the robots do their job properly. This is the only humans involved. So understand that that's probably going to be our future eventually. And who knows what that's going to look like. But I think we have a better chance of getting there sooner than a lot of places, is what I'm trying to say. I think the US will be fine, and that's why. And we have resources. That's where I'll leave it.
Yeah. I think the resource side of things is, I mean, at the end of the day, all this stuff going on geopolitically comes down to resources and the haves and have-nots. And that's where, like, I was just pulling up a couple things where there's like different divergences between the Shanghai exchange for silver and the what's trading in the West. Like this is from a couple. I'll fire up the screen here and just wrap up with a couple ideas, a couple things that are worth kind of talking about a little bit. And this is maybe like perfect question for you, V, with the disconnect and where some of these exchanges are, depending on who's setting the price. Do you think that starts to move to Asia and potentially the Middle East for other things? But for precious metals, do you think the price setting exchange eventually moves to Asia?
Well, just why don't you just give V the bowling ball and put him 6 inches from the pins with that question?
No, I know, but I'm asking because you see like some of the stuff and like.
Well, I'll tell you right now, man. The Shanghai Gold Exchange, in terms of actual physical metal flowing in and out and actual liquidity, it's literally 4 times the size of the CME.
Yeah,
4 times the size. So it's like, and they're growing.
Well, now you see, it's like, oh, we're gonna deliver like over 40 million ounces of silver, and that's like a giant chunk of what their expected, like what the actual physical silver is. I mean, who knows what they actually have or not, but like all this to say, like you look at this is where I'm like going back to the divergence between
and the other thing is also
silver miners
in Shanghai. It is physically settled contracts. That's the big difference. That's the killer in this whole entire thing. They knew that. Yeah, so when they set out to build this like 15, when they set out to build this like 20 years ago, 25 years ago, they wanted it to be the complete opposite of NYMEX, CME, and LBMA. The complete opposite of it. And this is exactly what they've developed. So this is a kill shot. They know the kill shot is in the physical, while we continue to delve in what we do best, paper fraud.
Yeah. Well, the
price is moving. I'll tell you right now, LBMA is hurting bad, bro. Hurting real bad.
Yeah. And this is like the big high level view of this and the amount of money that I think is going to flow into precious metals and other commodities, assets, right? This is not the type of chart you see at like the end of the move where it's like, oh, like you're at a 2% allocation as far as gold and like less than 0.5% to silver. And right, this is the type of thing where it's like a 10-year move in the making, right? And it's not something where like, look, I have no edge telling you if silver is going to 60 this week or next week, but 6 months from now, a year from now, is silver going to be over 60 and probably by a good chunk? I would think so. And when you get back to like the physical, one of the reasons that I think it's interesting is like if the paper exchanges start to have issues, then this all unravels quicker. And it's like
very quickly. You
start to price it at 65, 70 an ounce and you start to get real price discovery. And that's why the technicals and this other like stuff that people get zoomed in on, I think it makes sense to zoom out and say, okay, if there are structural changes happening, what is this worth, right? And silver's worth more than 55, 60 an ounce. So again, like it's not the first.
Why do you think it's been running up?
Huh?
Then why do you think it's been running up?
Well, I mean, obviously they like that's the thing is like we're in this I think third or fourth inning of move in silver and gold, not in the first stages of the bombed out right area, but right, are we in the 8th or 9th inning like some people say? No.
Yeah, no, I think we see 100 by next year, and then
next year.
It depends. Like if there's no major structural change in like the whole picture, it might hang out like between 50 and 100 for a minute. But I think
I like what Rob says here. It's a slow grind until it ain't. You're absolutely right about that.
Yeah.
All that's needed is just for one unforeseen event, one paper contract going sideways.
Yep.
Like what you said earlier, Ben, and this whole thing goes sideways very quickly.
Very quickly. Yeah, it's when you realize that the COMEX is basically MF Global on steroids.
Oh my God, yeah.
Well, here's the last question as a follow-up. Like, if we see some like real systemic issues with the paper exchanges, right? That's obviously going to lead to higher metals prices. Is that something where you're selling on that event just in theory because it's like, oh, silver ran to 80 an ounce and we're going to go back to 60, it's going to come back down. But like, what are your thoughts on, right, how you look at, okay, there's structural issues, like some of these things are impaired, silver and gold to start to rocket, right? I don't know if you think that's a time to lighten up or time to just hold on because it's going to keep going, or what are your thoughts on that?
Go ahead.
Yeah.
My thoughts are hold on to physical, and then use the paper game if you want to try to hedge. I wouldn't at that point with a rocket up. It never hurts to take some profit off the table. You know, if you've been holding silver since you bought it at $15 and all of a sudden it hits $150, like you got a times 10, dude. Like, you know, maybe take some advantage of that. I might take off 20% of my physical at that point. But what I probably would do with that is, you know, put it in the paper market if I didn't already have money kind of set aside for the paper market. And then I'd be ready to like buy back in, and, you know, I'd have some kind of target. Like if price went from 150 down to 102, I might buy back in, you know, I mean, it's just, and again, you're all talking about at that point, you have to evaluate the whole picture. The COMEX is not a paper market though. It's supposed to be a physical. Right now, it's probably a paper market in a big way, but they've been able to hold it together. Now, the rumor is that there was no cooler fan that short circuited last week on the CME. The rumor is that when silver made its all-time high, they were not able to settle physical contracts. And so, we have a cooling fan issue. And, you know, the server went down because the hamster stopped running in the wheel. And no, you're probably seeing the short circuit event. They just can't call it a short circuit event because then the world loses confidence in the fact that the COMEX can settle physically. So I wouldn't be worried about discrepancies in the paper exchanges. I would be worried about major discrepancies in the COMEX. Yeah. And the problem with the COMEX, and in order to settle physically with the COMEX, and my understanding is it's not that there's a shortage of silver in the world. I mean, there is in a way, but the major shortage that affects them is the kind of silver in which they can settle, right? So you're going to go to all the, you know, like V would say, Jimmy John cash and carry, and, you know, buy a bunch of rounds and melt them down and make the silver. And, you know, like, no, it's just, you know, that shortage of that kind of silver is definitely analogous to the broader shortage, but retail, as far as I know, really isn't in this yet. You got us here in this channel, and we're way ahead of the game. You know, retail is going to jump in when it starts to hit 100. That's my opinion. Like retail truly, you know, your guy that takes his paycheck and buys some silver, like that's going to happen at like $100 an ounce. But V, please go ahead.
No, that's it. That's all I gotta say.
Similar sentiment, right?
Yep. I think it's basically wait and see and determine what the situation is if and when it happens, as far as paper market shenanigans and all that. So, yeah.
Awesome. Well, any closing thoughts, Ben, or was that it?
No, that's what I had for today. I think heading into 2026, if you're interested in markets and all this other stuff, keep an eye on the precious metals, keep an eye on the commodities, and I think we are just getting started on the money that's going to start to flow into hard assets that can't be printed.
Awesome. V the Gorilla, you get us out of here, sir.
Guys, thank you so much for listening in. We'll be back tomorrow, Cuss with Gus, with special guest El Cuco. CJ returns tomorrow. Keep it locked and loaded right here. Take it away, Cowboy.